In this presentation, we're going to record the receipt of a payment within Xero. In other words, we're imagining here that an invoice had been issued in the past. We're now receiving a payment on that invoice. The invoice increasing the accounts receivable, the payment now decreasing the accounts receivable and increasing the cash account or an undeposited or clearing account. Let's get into it with Xero. Here we are in our dashboard for the demo company. We're going to do our standard process here, first opening up our financial statement. So I'm going to select the drop down here. We're going to be able to go into the balance sheet first, opening up the balance sheet. As it then opens up, or when it does, we're going to be right-clicking on the tab up top, and we will duplicate that tab to push it over to the right. And then we're going to go back to the tab to the left. We're going to do the same process for the income statement. So we're going to be taking the drop down, and we're going to be going to the income statement. It could be called the profit and loss, the P&L if you're used to other software such as QuickBooks. Income statement's the more standard term, actually. We're going to be right-clicking on the income statement tab and duplicating that tab. So we have those two lined up to the left. I'm going to go back to the tab to, those two are to the right. We're going to go back to the tab to the left. And then we're going to consider our flow chart. I'm going to jump over to QuickBooks Desktop just to consider that flow chart. So here's the general flow that we have for the customer section. Here's our story. Here's what we are imagining that happened. We have the create invoice. What happens when we create an invoice, as we did in the prior presentation? We have the income going up, and we have the accounts receivable, people owing us money, going up. And if there is an inventory factor, then the inventory goes down, and we record the cost of goods sold. The expense goes up, bringing net income down for that as well. So income goes up for the sales, goes down related to the cost of goods sold. The net income goes up for the sales, down related to the cost of goods sold. We also have sales tax, which we talked about as well, which I'm not going to get into at this point. Then we're going to receive the payment. So we're imagining then we're getting something in the mail. We can imagine we're going to get a check in the mail or something like that. At this point in time, the received payment should be increasing some type of cash account, and the other side will be decreasing the accounts receivable, representing the fact that the customer no longer owes us that money. Now, there's kind of a point here that we're kind of sketchy on this point as to whether we should put it directly in the checking account or whether we should put it into kind of a clearing account and then group those checks together as we then go to deposit them into the bank. So if you're just getting single checks and you cash them one at a time and they're going to show up on your bank statement one at a time as a check, you could just put it right in the checking account, and when you reconcile, it'll be okay. However, if that's not the case, if you're going to be grouping things up like cash or whatnot, and you group that up, and then you deposit it, then you may want to use a kind of clearing account. All right, so keeping that in mind, where's the received payment? Over here in Xero. So now we're going to be in Xero. We're saying that we're going to have a received payment. Now, there's a few ways you can do this. I'm going to go back to the dashboard. You know, recall we entered an invoice last time. So what I'd like to do is actually find that invoice and then record the received payment related to that invoice, basically in the same data input screen. That's how Xero has it set up here. So I'm going to go to the invoices owed to you from the dashboard. So we're in the dashboard, invoices owed to you. We're looking for the awaiting or pending invoices. So those are the ones that have not yet been paid to us. So I'm in the awaiting or pending tab up top, and we're considering these two invoices you'll recall that we made for Adam. So let's say we got this invoice for Adam, and we received a payment for it now at this point in time. We can then simply open up the actual invoice. So I can open this item up. Now here's the actual invoice that we created. So if I then scroll back down, we have the $219 that is owed. Now, if I have the received payment, I'm assuming it's going to be for the full amount of the $219. So I'd come down here and put the $219. If it was something other than $219, like we got $100 and we were expecting the other $119 later, then we could put the $100 here. And then I'm going to go to the pay date. So I'll put the pay date, and we're going to say it's somewhere. Let's keep it in February 5th, let's say. And paid to. Now, this is where we can either go to our checking account, if it's batching in the checking account as we think it will be in the bank reconciliation, or we think it'll be pretty easy to reconcile even though it's not exactly the same. In other words, when we get our bank statement, we would really like the bank statement to show the same deposit number as is shown in our account. It won't if we're grouping deposits together as we put them into the bank. So you got to think about that. How is it going to be hitting the bank, and will it be easy to reconcile? How can we get it in our books so it will be the same, so that when we reconcile our books to the bank, it'll be easy. So I'm just going to put it right into the checking account here. I'm not going to put any reference. I'm going to keep it as is, and then I'm simply going to add the payment. So there we have it. So payment received. Now if we go to the awaiting payment to the paid section, so I'm going to go back up here to the paid tab in our invoices, we see that we have this particular invoice for Adam, which has now been paid. What's going to be the effect on the financial statements? Let's go ahead and take a look at the balance sheet. So we're going to go into the balance sheet. I'm going to change the date to 2020. Let's do February 29th, 2020. And then I'm going to refresh or update the screen. We should then have in the cash up top, we should have the cash. And something's funny because the cash is overdrawn. So the cash account is actually down here because it's it's overdrawn. So it's actually a liability. So in other words, if the cash going out is greater than the cash going in, the cash was flipped from an asset account. Instead of them showing a negative cash account that's overdrawn, they moved it down as you should, showing it really as a liability. But in any case, here's our checking account. It would normally be an asset account, but now it's a liability account because it's overdrawn. So I'm going to go into the checking account and actually put it in there in May for some reason. So I'm going to go up to May 31st and then update that report. And then if I scroll back down here, we're looking for May. There it is. So here it is, the 219. And notice it's showing up here as a receive payment. So that's kind of like the form that you would think of. If I go into that form, if I click on it, I can drill down back to the data input form. You'll note here it doesn't show, once again, the full form, but it says up top the transaction, it's a payment. So that's kind of the form that you would think of. And if you wanted to jump over to the invoice, then you can select this invoice and it'll jump over to the invoice that is related to. The payment is related to this invoice. I can then, and you can see the payment, obviously it has the other way you can track down here. If you go to the invoice, you can track to the actual payment. All right, let's go back here. I'm going to go back to the balance sheet. The other side then should be in the accounts receivable. If we go into the accounts receivable and drill down on the AR on the accounts receivable, and then we scroll down to, we need May again. So I'm going to select the drop down and go out to May and take the, no, I went to June. That should be okay. So I'm going to enter that and scroll down. And then here we have the payment. So receive payment in May. There it is. There's the 219 decreasing the receivable. Then I'm going to go back up top. I'm going to go back to our data. Now, also note that this accounts receivable report should be supported by the another accounts receivable kind of subsidiary report that's going to show this information by customer. So I'm going to select the drop down. Let's take this out to May on the balance sheet and update this report. Then let's go back to the first tab and let's consider our reports. I'm going to go to the accounting up top. We're going to look for our reports. And then in the sales section, we have the age receivable detail, the age receivable summary. I want to look at the customer invoice report. So let's take a look at the customer invoice report. I'm going to change the date up top and we're going to pick up the date to May 31st. So we're going to select May 31st. I'm going to update that report. And then down below, we can see the information for it. I'm going to scroll back down and we have our invoice. We have the reference. We have the type. And then we have the date, and then we have the paid date. So here's the total invoice, the amount paid, and the amount due. This would then be the outstanding invoices at this point in time. It tying out to 983245. That should tie out, you would think, to the balance sheet. It's a little bit off here. It's 952303. But the point here is that the accounts receivable account represents who owes us money. We should be able to support that by another report breaking out who owes us the money, right? By customer, in essence, by the open invoices here, tracking the open invoices. Now, we'll get more into this report in the future. You can adjust this report in different ways. We have the sorting field down here that we can sort this report in different ways as well. Now, if you did want to use a clearing account, put it into something like a clearing account before you make the deposit, then you'd have to add the clearing account. Now, you'd think the clearing account would be under the accounting and then go to the chart of accounts. So the chart of accounts down here. But if you want to add the bank account in particular, you're going to go to accounting and then you're going to go to the bank account. So accounting and then the bank accounts. Part of that is because the bank accounts are so special and that they have different needs, and you might have the situation where you want to use the bank feeds, which we'll probably discuss at a future point. So I'm going to go ahead and add a bank account. So we're going to go through the process of adding an account. It's going to be a bank account type. You can then choose your institution. I'm just going to say Capital One. So for the institution account name, I'm going to call it not a credit card. I'm going to call it Bank Clearing Account. And then the account type, I'm going to select the account type, which is going to be, let's put it into a savings account. So we're going to say savings account, and then account number, I'm going to put in here 095, and then I'm going to continue. So we're going to continue that. And then we have our bank clearing account that has been added. Now let's go back to our invoicing. So I'm going to go back up top, and I'm going to go to the dashboard. So within the dashboard, we're going to go back to the receive payment. So we're looking for the invoice so we can receive payment on it. So I'm going to go to the invoices owed to you, invoices owed to you. Then I want to go to the awaiting payment invoices, the ones that are awaiting payment. We're going to be looking at that other invoice that we had for Atom. Here it is. Let's go ahead and open that invoice. So I'm going to open that one up, and then we're going to apply a payment to it. So there's 320 there. Let's say we didn't pay the full invoice now. Let's say it was only paid for, let's say 100. It's the amount paid on it. So I'm going to say 100. And then the date, I'm going to say, let's see if I can get it in February this time. February 5th, let's say, February 5th. And then paid to, if I select this, now I'm not going to put it into the checking account, but to the clearing account. So I'm going to put this in the clearing account now. And then I'm not going to put a reference number to it, and I'm simply going to add that payment. So now it's going to do the same process, but it's going to go into this account, which is basically the clearing account. Now I still have the 100 paid. Notice it's still in the awaiting payment section. It's not in the paid section because it was paid, but only part of it. Let's do the other part of it now. I'm going to go back into Atom here, and we're going to say, okay, now we got another payment. And so if I scroll down, we're going to say the remaining is the 250. Let's say that we got that other 250 on February 25th, and that's going to go into the clearing account as well. So I'm going to add that. So now we have two payments that paid off that one invoice that happened in two payments. So now we're going to go back to the balance sheet. Let's go ahead and refresh the balance sheet using this little icon on the top, or else you can just highlight the URL and hit enter on your keyboard. And then in the assets section, now we have the bank account. So here's the bank account, and this is the bank clearing account. So that's the clearing account that we set up. It's kind of like, we're going to say this is a holding account. This represents us basically holding on to money. We can imagine holding on to checks or cash that we're then going to go to our checking account and deposit in some kind of lump sum payment. If we go into the detail then, we've got the February 5th where we received $100, and then the $250 here, that makes the $350. Now what we're going to do is we're going to take that money, we're going to put it into the bank account in the future in one lump sum, one lump deposit, which will be the $350. So the other side of this transaction will of course be the same in that it will be reducing the accounts receivable. So there's two kind of ways we could do that. Again, it just matters how you're going to group this information into the checking account so you can help to reconcile. The other side of that's going to be in the accounts receivable. So if we go into the accounts receivable, we're going to see there's the 100 and the 250 there. So next time we'll do the next step of this, which is going to be to take that amount, that 350, out of the clearing account and put it into the bank in the same kind of format that we expect it to appear on the bank statement, so that our checking account then will reflect the $300 rather than it'll reflect the checking account will reflect on the bank side $350, and on our books it will reflect the 350 rather than the 100 and the 250 amounts. And that's what we'll do next time.